In this video, I discuss whether cryptocurrency, Bitcoin, Ethereum, etc. should be part of your retirement strategy. Coming up next on Holy Schmidt.
Holy Schmidt!
When I talk about cryptocurrencies such as Bitcoin, Ethereum, Dogecoin, etc., I get one of three reactions. One of great skepticism, one of reverence, extreme reverence in many cases, or one of confusion because the person who I'm speaking with doesn't have an understanding of what cryptocurrency is and they don't have the capability to join the conversation. So before we begin, I'm going to give you a 101 discussion on cryptocurrency, a foundation. It won't take more than 30 seconds. And with that, you'll be able to join just about any conversation out there on cryptocurrency. And more importantly, you'll be able to decide if it's something that you want in your retirement portfolio. Cryptocurrency is digital currency. It can be sent from one person to another across the world with no bank in between. It uses something called blockchain technology. Now, in a nutshell, blockchain technology means that not just one person or a small group of people have the information, the entire blockchain does. So if something goes wrong, everybody sees it and it gets corrected instantly. All records are irreversible and viewable by everybody. So it makes it impossible for someone to forge or hack into the blockchain and create copies of something like Bitcoin. Let me highlight that throughout this entire presentation that I'm going to use the term Bitcoin and cryptocurrency interchangeably. Just know that we're talking about cryptocurrency as a class of investments. For many people, the concept of a digital currency that sits outside any one country is an idea whose time has come. This is particularly true when you hear stories about countries that print money and buy things they can't afford with money that they don't have. And by the way, that wasn't directed at any single country. Right now, a lot of countries are doing what they have to do to get through the current situation that we're all in. But with Bitcoin that has a 21 million coin limit, digital coin limit, it seems to make a lot of sense to people, particularly now, but those that are living on a budget and they themselves don't have the ability to go in and just create more money. So for many people, Bitcoin is a savior currency. When everything else in the world is falling apart, they can simply take out their USB stick, put it into a computer, and download their savings right then and there. And candidly, people have seen wonderful performance with Bitcoin. If you had purchased $1 of Bitcoin in 2011, February of 2011, it would be worth $55,000 today, which adds to the allure of Bitcoin. People can't get their mind around its true value, and so they're wondering if this is just the beginning. And today there are many ways to buy crypto. You can buy it in an IRA. In fact, if you went online right now, you could open up a crypto IRA and be up and running early next week. So the question is, should cryptocurrency, Bitcoin, etc., be part of your retirement strategy? The disclaimer, past performance is not indicative of future results, screams out here. At a basic level, investing is buying future cash flow, while speculating is betting on the direction of the market. Stocks go up when investors realize that the future prospects of a company are better than they expected, and stocks go down when the investors realize the future prospects are worse than expected. And that's why when a company announces a positive earnings surprise, its share price goes up, and when a company announces a negative earnings surprise, it goes down. There's a lot more to it than that, of course. If people don't believe that the earnings surprise is representative of the future, the stock might not even move at all. Now, if you're investing in a mutual fund, the fund manager is the one who's watching the market and looking for the investments on your behalf. Just add a few more zeros and you have a portfolio of companies that manager is managing, which tends to be quite large. So how do you make money in cryptocurrency? Well, there are some incredible fortunes being made right now in cryptocurrency. In fact, there are people that are looking at world events and they figured out that a tsunami in Asia will cause cryptocurrency's price to rise, and an earthquake in California might cause it to fall. I just used random examples. Of course, don't use that as strategy because I just made it up. But the point is, there are people out there that have tested and retested their models and they know how these events are correlated. But these people are not investors. They're traders, maybe even gamblers. They have spent months, maybe even years developing their model. And so when the tsunami hits in Asia, they know that they should be buying more Bitcoin. Most of the time, it's not something that you and I can see. You won't open the Wall Street Journal and read about the tsunami in Asia that caused the price of Bitcoin to rise by 3% yesterday, at least not in this day and age. They're not looking at the underlying profitability of one Bitcoin because there is no underlying profitability of one Bitcoin. It's not like a share of stock. If you buy a share of stock, you're buying a little bit of that business's cash flow, and you get money on that either in the form of price appreciation or a dividend from the company, or both. So what is the allure of cryptocurrency in a retirement portfolio? Because there are a lot of crypto IRAs being opened right now. For many, it's simply greed. They hear about other people making a lot of money in cryptocurrency and they want in themselves. They don't know how it works or why it works. They just know that there are people making a fortune and they're going to do it themselves. They're going to bet the farm on something that they know nothing about, hoping to make a lot of money. The story's not new. It's been going on for 4,000 years. In fact, games of chance started about 4,000 years ago. And aside from the fact that you could lose all of your money when you invest in cryptocurrency, an IRA actually is a very good place to invest in crypto because you don't pay taxes when you trade. You don't pay capital gains or realize capital losses, as the case may be, until you actually take the money out of the account. And if it's a Roth IRA, well, you don't pay capital gains at all. So here's the bottom line. I'm not saying that you should not buy cryptocurrency, but realize it for what it is. You are speculating. You're not investing. Also understand that there's a very, very, very small group of people out there that actually know when to buy and sell cryptocurrency. And if you're watching this video, that's probably not you, at least not yet. It doesn't mean that you can't get the skills, but the vast, vast majority of people who buy cryptocurrency don't in fact have the skills to trade cryptocurrency. Those that do well almost always have a trading background, perhaps even a background in trading foreign currency. So should you buy crypto? Well, there isn't a lot of information out there that you can attach yourself to and learn. It's not like buying a book on real estate investing. So that private information that we talked about really has to be sought out by you. And there are a lot of people out there that think that they know the information, but they haven't in fact cracked the code. And those that have aren't sharing it. So you're placing a bet. And you have to be comfortable with losing it all because cryptocurrency trading is a zero-sum game. Somebody wins, somebody loses every single time. There are only two sides to the trade. If you like this video, please make sure you click subscribe and turn on notifications so that you get alerted the next time I post a video. I post about twice a week. Also, check out this video where I debunk a strategy on how to pay off your home in 5 to 7 years and replace it with a more sensible option that might take 7 or 8 years. This is Jeff Schmidt. Thanks for watching.